Where should you invest? Real estate or the stock market? Which one pays more? How much does each one cost? What are the risks? There are a lot of questions you may have, and my intention in this video is that you have a better understanding of which one makes the most sense for you. Every person is unique, and at the end of the day, it is based on your goals and objectives. And more than anything, what are you looking to do? I would even encourage some of you not to rush into spending your money right away, especially for the fear of missing out. Do not invest into get-rich-quick schemes, and as an investor, always consider your risks. Consider your pros and your cons for absolutely everything. This video is not about either or, but it is about understanding the differences between both of them and you making that decision for yourself. In this video, we will be talking about both scenarios, pros and cons. What are the risks and what is in it for you? If you want to find out which one suits you better, like, subscribe, and watch this video. If you are watching this video because you want to invest your money, it is most likely because you have found out that inflation is real. And if we don't employ our dollars, inflation will eat it away. That is called the loss of purchase power. Even if a bank guarantees you a 1, a 2, or a 3%, if it is not outpacing inflation, in that case, it is a guaranteed loss. I will give you the answer very shortly for which one is better, real estate or the stock market. Historically, on paper, the stock market has paid more than real estate. But once again, they each have their pros and cons. Although in this video, to keep it fair, we will compare the S&P 500 versus a single family home. The S&P 500 because it is a balanced portfolio, and a single family home could be where you live. Although the stock market has paid more on paper, the downside of that is that unfortunately you cannot live inside of your investment accounts. However, in a single family home, you can. It is one of the few things you can buy and live in at the same time. Number 1, historical comparisons. Which one pays more, the stock market or real estate? One of the interesting things about investing into real estate is leverage, which means you can actually control a large asset with less money up front. For example, if you did want to buy a home, you don't need to pay everything cash. You can do a finance option, which is called a mortgage. And instead of paying the full purchase price, you make payments to the mortgage company. Typically, real estate, the average home nationwide appreciates by 4% every year. And potentially down the road, it can create you rental income. And the big key factor in real estate is never borrow more than you can repay. Because if property values go down, you are still stuck with those mortgages. Real estate leverage. Which one of these costs more? The short answer is real estate. It typically requires more money up front. And normally when you do own properties, now you are responsible for taxes, insurance, repairs, maintenance, etc. Because when you own property, it isn't as passive income as you think it's going to be. You must be responsible for paying taxes, managing the tenants, and termites represents any maintenance or upkeep that you need to be responsible for as the property owner. When the gurus online talk about passive income in real estate, it isn't really as passive as they make it to be. If you want passive income, you are far better off on an income fund, investing into an income fund, that of which will produce a monthly or a quarterly dividend, depending on how soon you want this income. I have even heard some people call these funds a lazy way to build wealth because you are not after tenants, you are not responsible for repairs, you don't have to go and visit the property, you just let the account do its thing and you can sit back and collect the income. Market liquidity. Which one is better? In this example, let's say your property is worth $500,000 and you have $500,000 invested. Liquidity means the ability for you to pull out money. For example, if your house is paid off, $500,000, it is completely paid off, but you needed money tomorrow it is going to be very hard to put your house in the market, find a buyer, and sell everything within one day. There are ways on how you can take out money from the property using equity loans or HELOCs. However, that is money that we are borrowing, so it is something that we need to pay interest on, and we actually do need to qualify for these programs. On the other hand, investment accounts, they are far more liquid. If you needed money, normally within 2 to 3 business days, you can have a direct deposit. It is far more easier to cash out. It is far easier to cash out a portfolio versus having to cash out or sell your home. For some people, liquidity is freedom, but having so much money on the sidelines can also tempt you to act emotionally. So if this is you, avoid the feeling of fear of missing out. Every so often, we might hear of some trends and a hot new topic, but avoid making emotional decisions, especially when it comes to your money. Market growth and discipline. Being invested in the market can potentially give you higher returns versus the average single family home. Investing in the market rewards patience. So you need to be disciplined to have your money in there doing its thing. So if you are considering investing, never invest emotionally. And I would even encourage you to reach out to me. Ask for a copy of The Real How Money Works. And if you want a true investment strategy, a true financial plan, you need to consider your 3 fundamental accounts: emergency, short-term spending, and your wealth building accounts. Tax differences. We will briefly compare the tax differences between owning real estate and having money in the stock market. To keep it simple, real estate, we must pay taxes every year. Whereas investing in the stock market, in some cases, it can grow tax advantaged. There are ways on how you can take tax deductions on your earned income and at the same time, keeping money for yourself. In accounts such as the Roth IRAs, traditional IRAs, or solo 401ks for those who are self-employed. There are other accounts, and if you want to know which one makes sense for you, send me a message and I will give you a copy of The Real How Money Works. So to answer the question, which one is better, investing in real estate or investing in the stock market? And that truly depends. If you have millions of dollars sitting in the sideline, at that point you can afford to invest in both. But if you are just starting, then I would recommend that you consider investing into the stock market. To be specific, take advantage of the best retirement account, which is the Roth IRA. And many people would advise you to pick an index fund. If you Google the definition, what is an index fund? Many times it will say it is a mutual fund. The reason why they use the S&P 500, it is because it is the 500 largest companies in North America. The gurus online like to recommend this because your money will be backed by those companies. And sometimes when some companies fall down, other companies come up and take their place. So if you are just getting started, get used to accumulating and contributing money into your retirement accounts and your qualified accounts. Your retirement and your qualified accounts. So that soon enough, if you do want to buy a home or real estate, you have the money. But if you are someone who already owns a lot of properties or a lot of units, and you are looking for an easier way to make income, in some cases, for some people, it might make sense to sell some properties, to put it somewhere else to provide an income. That way you are not dealing with tenants, trash, or toilets, the 3 T's. So if you are sitting on a lot of cash, think about it. What is your biggest priority? Do you want a physical place where you can live or vacation? Or are you concerned about growth in your money? Investing in the stock market or real estate can sound complex. So I shared the 2 most simple ones, a single family home and investing into your retirement accounts that are composed of mutual funds or the S&P 500. Just like real estate can mean a lot of things, so can investing. So if you want to make an informed decision, I would recommend that you like and subscribe. Follow for more.